Australia's economic status, robust demand, and a persistent property surge. Australia's economy in late 2025 is defined by resilient consumer activity and a robust housing market, creating persistent inflationary pressure that has halted the Reserve Bank of Australia's RBA ratings cycle. Interest rates and economic momentum. Despite 75 basis points of rate cuts earlier in 2025, the RBA has held the official cash rate steady at 3.60% since November. The central bank is widely expected to remain on an extended hold through 2026. As recent data suggests, inflation risks persist. The underlying economy remains stronger than anticipated. Household spending. Latest figures show Australian household spending, year over year, rose to 5.6% as of December 4, 2025, exceeding the 5.0% forecast and signaling durable consumer demand. This strength reduces the likelihood of further RBA rate cuts. Inflation outlook, with the CPI easing toward the RBA's 2 to 3% target, but services inflation remaining high. Policymakers are seeking more sustained evidence that inflation is contained before committing to further easing. The housing boom. The housing market experienced a significant upswing in 2025, driven by the earlier rate cuts, strong population growth, and easing borrowing conditions. Price growth. National home prices have surged approximately 9% year-on-year by November 2025, with unit prices up 7%. Investor dominance. Record investor lending, which now constitutes roughly 40% of all new housing finance, has fueled the price growth and ratcheted up competition, pushing affordability to record lows despite the rate relief. Market divergence. While overall growth is strong, mid-size capitals like Perth, Brisbane, and Adelaide are currently leading the pace, outpacing growth in Sydney and Melbourne, which face greater affordability constraints. The Australian dollar AUD currently sits near 0.6580 against the US dollar USD. Following recent economic data, the AUD-USD market showed an initial drop followed by a sharp rebound, indicating volatility. However, the general trend over the longer term appears to be tracking upward. The RBA's commitment to holding rates higher for longer to manage persistent domestic demand provides some underlying support for the currency.